Most traders lose money chasing breakouts. Why? Because smart money traps you, then flips the market the other way. Instead of chasing, fade the breakout. All right, so just jumping right in. We're looking at today's price action, SPY, April 28th, 2025. At market open, we get a strong push to the upside. This is a key zone. My level's marked. Strong push to the downside. And then we get our first lower high. 1, 2, 3, 4, 5 candles cannot break above this level. Most traders out there are looking for this level to break out. Once it breaks out, they'll be going long. And we finally break out, not knowing that they're going to get trapped right here. Let's see what happens next. Boom, stopped out. You have another opportunity to go long. Boom, stopped out. Right? Why do you think that is? Because smart money knows this. Instead, when you see something like this break to the upside, understand it's going to come back and snap back into place and go right back into that range to the downside. Let's see how this plays out. We snap right back into that range and look where we bounce at a key level. So it's going to be some buying pressure at this level. Here we go again. It breaks out of that range. Breakout traders are going to enter the trade thinking, hey, it's going to break out. Incorrect. Right? We're going to get snapped back right back into that range. You should fade the breakout. Don't trade the breakout. Stopped out again. Another opportunity to go long. You're going to get stopped out again. And for those of you watching my channel, you know I traded to like a pullback. Higher low, higher high. First entry short. Right at the key zone to fade it to the downside. Now keep in mind the structure at hand. We had a big drop to the downside. We're consolidating. There's no reason for me to be looking for longs. I want the continuation to the downside. I have my key entry signal right on top of this channel to fade it to the downside. My next candle appears, but it does not break below the previous candle, so I cannot enter this trade. Now, if you watched my last video, you do know I do use a Williams alligator. So that means I use the 8 EMA and the 13 EMA crossover. Once those cross, I'm allowed to enter the trade. However, we need double confirmation with that. So the next candlestick needs to tick below the previous candle. If it doesn't do that, we wait and see what the next candle does. The next candle does tick below our entry signals low. So now I can enter the trade with the confirmation of the 8 EMA and the 13 EMA line crossover. I take out my fibs. We mark our profit target and our stop. Now the key here is to ride the momentum to the downside as we continue to push down. So this is what we want from the market. Perfect. Now what I want you to look at is this section right here. Buyers try to step in the market and push the market to the upside. Smart money, right? That's how you're supposed to be trading ranges. So once we break down to the downside, the key is to push the market to the upside and we snap back into that range. However, there's no confirmation of the 8 EMA and the 13 EMA crossing. And by the looks of the Williams alligator, the momentum is still down, right? So I have every confidence to continue to hold the trade. Now, if there was a cross at this level, then I might have to reevaluate my position, trade the price action as it is, and we trade or fade the breakout. We continue to sell off, strong momentum to the downside. Now notice with the Williams alligator, we still haven't broken the 5 EMA, the 8 EMA, nor the 13 EMA. Price is still below all 3 moving averages. So there's no reason for me to sell at any given time because the market is still in our favor. We finally hit my last profit target. Now here, you can take profit, right? And then leave a few runners to maximize your gains. And that's the end of the video. Remember, not every breakout is the real deal. Sometimes the best move is fading the hype and catching a reversal. If you get value from this, hit that like button, subscribe for more trading breakdowns, and drop a comment below. Stay sharp out there. I'll catch you on the next one. Take care.